Hey guys, and welcome to the Working Money Channel. So going to start this off today with MacAttack XRP. That's at MacAttack XRP on Twitter, and he posted this with regards to the Bank of England. The Bank of England claims that cryptocurrencies could make banking systems redundant and useless. And we know Brad Garlinghouse has gone on the record saying that, XRP is not going to replace banks. It's not going to replace any kind of reserve currency. It is meant to be used within the banking sector. And so this kind of article might be a little frightening maybe to some of you guys. But ultimately, really, there's nothing too big to worry about. So John Cunliffe, the Deputy General of the Bank of England, stated that the rise of cryptocurrencies and stablecoins could result in the banking system running dry of cash flow. Central banks from all over different parts of the world are all exploring stablecoin currencies in their economies to try and find whether such digital financial infrastructure backed by the central banking system can be viable. The Bank of England has previously made warnings about the famous and controversial Libra stablecoin. We know that. The bank believes that careful consideration should be made and detailed studies must be taken up to understand the full implications of adopting a fully digital form of currency like the ones that stablecoins and cryptocurrencies provide. Now, he talks about the fact that if we have these cryptocurrencies or stablecoins or what have you, a digital form of currency, he worries that mass money movements from traditional banking systems will go to virtual wallets provided by tech giants. So you and I will have our virtual wallet and we will have millions of dollars being transferred from somebody else's wallet to our wallets without having the need to use a middleman, without needing a bank. People are more familiar and root more trust in these well-recognized technology companies. Well, it doesn't help that bankers have a history, at least in the United States, of being untrustworthy. And this is, caused a whole new perception of bankers with a new generation of people. Let's not forget, in the 2008 financial crisis, many people lost their houses, many people lost their jobs, and there was a generation of children who saw their parents going through this. Now, fast forward 12 years, these children have now grown up and they have come to distrust banks. These are younger millennials, the same generation that wants things instantaneously, so crypto seems to be a perfect fit for them. So the Deputy General continues by saying, in such a world, and depending on how whether stablecoins are backed with other financial assets, the supply of credit to the real economy through the banking system could become weaker or indeed disappear. He said that would be a change with profound economic consequences. Now, I don't necessarily think that banks are going to disappear. Regardless of how cryptocurrencies are going to change the way perhaps we perform certain transactions or go about our daily lives and how we do conduct business, banks will always be there. They are too powerful already, and governments are just not going to let's be honest, governments are just not going to let people have unlimited autonomy with their money without intervention. For example, there are caps on how much you can send from one person to another. In a lot of countries, it's $10,000 without being flagged. Once you make transactions over $10,000, the bank will take note and scrutinize those types of transactions more seriously for all kinds of reasons. Money laundering, right, to prevent fraud, all kinds of reasons like that. But I understand what John Cunliffe is saying here. The more we become integrated with this digital economy, the less need there will be for banks. And I even think today there is not a lot of need for banks, and we're already seeing this. We use ATMs for our day-to-day withdrawals for cash, but we may even see traditional ATMs, the way they have been for the last 20, 30 years, change as well and move towards a new model revolving around cryptocurrency. So this is really interesting, guys. I'll link this article in the description if you care to read it further. This from XRP 2020 at 2020 XRP. Apparently Ripple took this down and it leaked out today. What are you guys seeing on your screen? And so Ripple had originally posted this on their official website, touting 450 plus customers. Now, since the XRP community is so keen and so savvy, we noticed this right away. It got all over Twitter, and then Ripple changed it back to, I think, 300, what they had said back in November. The community engaged in a discussion regarding the data about 450 customers on the Ripple website, which was later changed back to 300. A short while ago, an XRP community member noticed that the figure summarized in the amount of Ripple's customers on its website totaled 450, implying that compared to the fall of 2019, so only a few months ago, the number of companies collaborating with the San Francisco-based blockchain behemoth had significantly increased. However, there has been no official announcement from Ripple itself on this matter. So that was kind of interesting. A lot of people are saying it was probably just a typo. That's my thought as well. One thing I do know, though, is Ripple knows how much we look at their website, and every little thing has to be perfect on their website, because we will, as the XRP community, we are looking at everything, even something as small as the partnership number, give or take 150 partners here or there. Inconsequential to some, but this means a lot to us. So Eric Dadu down here, I think sums it up pretty accurately, at least that's what I'm assuming. The fun thing about XRP and ODL having actual utility is that progress can be tracked regardless of whether Ripple has 300, 450, or 1,000 clients. Liquidity B is home to all of the info you need. Real utility projects will scale. No hype, speculation, or false narratives required. We're going to continue to see liquidity build, and we're going to continue to see more partnerships. Move on to RippleNet. More utility going through XRP will eventually drive price once the ecosystem is robust enough to handle that. Over here, Matthew Liny on Twitter posted this. UCPB Bank in the Philippines has Earthport as a remittance partner via URemit. Anyone know if they're leveraging XRP? Well, we know Earthport is a partner of Visa, and we know back in 2014, boy, 2014 seems like forever ago, but this from Earthport's website back from 2014, real-time remittances with Ripple Labs deal. So Earthport made a deal with Ripple back in December of 2014, and so the question is, are they leveraging XRP? Are they not? UCBP, we are pleased to introduce URemit, UCBP's remittance service that caters to your unique needs. With URemit, you have various options to send remittances to your beneficiaries, and here are some of their remittance partners. Down here, we have Earthport, serving the UK and essentially worldwide. They have some other remittance partners here that do remittance for them. Still got to find out if they're going to be leveraging XRP. I think it's just one of those things where in the corridors where they can, they will. And as regulations continue to become clear, we will start to see more transactions settle through XRP via Earthport, whether it's Earthport or any of the other platforms that have the ability to settle with XRP. I want you guys to think about this for a second. We're going to look at the market, and we know we're crashing. And this is the traditional market. This is the Dow Jones Industrial Average I have up right now. We're crashing hard, and the beer flu is not helping matters. In fact, it's triggering this crash. And in former years, there have been other diseases that we've been scared of. SARS, Zika, Ebola, just to name a few. And this goes back to the idea that regardless of what it is, the market is crashing, big institutional investors are getting richer and richer, and we're wiping out the middle class. There is something new this time. Compared to 2008, now there is an emerging asset class, something that hasn't been tapped yet, and that's cryptocurrencies. How will that change the game? Will it even change the game? Well, I certainly think so. Big money hasn't gotten into cryptocurrencies thus far, and this is why we're seeing, market caps hovering around, 250 odd billion or so, 300 billion. That's not big when you consider the markets of the world. We have currently seen losses, but it's nothing in comparison to what we could realistically see. Let's just go to the S&P 500 for a second. And here are the last few days, okay, on the S&P, and that's a steep drop, okay? Even in crypto terms, that's a pretty steep drop. Let's count that out. What is that? That is about a 15.8, roughly 16%, okay, since February 19th was when we first started seeing that drop. Now we've rebounded a little bit, buyers, and look at the volume here on the S&P. Buyers are getting anxious, but guys, I think a little too soon. Let's go look at the S&P right now on the weekly just to kind of give you guys some perspective on this. Here was the economic crash of 2008, and this was big, okay? When this happened, this was huge. The S&P 500 crashed even further than after the dot-com bubble back in the early 2000s. Making a 57.5, let's call it 58% correction over only a few short months. Then it rebounded, and by 2009, we were making gains once again. But 58%, that sounds like a lot, but in today's terms, you know where that would bring us, guys? Let's put this up here. 57.5% would bring us 57.5 was exactly where we were. 57, boom, there. 57.5. Interesting because it would bring us right back here in this resistance level. Former resistance equals new support for the S&P 500 back right before it crashed, somewhere in between here, this zone here. Okay, 57.5% crash here, 57.5% crash here, and that is the market shedding money. That's really important to note. Since 2008, I believe there was a statistic on this, most people who entered the stock market were not even the mom and pop types. A lot of mom and pop types lost confidence, at least early on, and the mom and pop types started investing once they saw the rally, and once they felt trust after a few years of gains. So, a lot of this wealth was transferred to the rich. So after 2008, the rich certainly did prosper. This is why we're seeing more millionaires and billionaires than we've ever seen before. But this time there's a new emerging asset class, cryptocurrency. And so unlike previous market crashes, I think this looming crash really is going to up the ante for investors. There are new things they can invest in, cryptocurrency being that main thing. So let's just do some quick math here, guys. The market cap of the S&P 500 as of December 31st, 2019, so kind of where it was at all-time highs, was $28.1 trillion. Let's say it crashes 57.5%. Let's even call it 50 just to make the math simple. That would mean $14 trillion will have exited the S&P 500 alone, not to mention other markets, with this economic collapse. Now, not all of it is going to go into cryptocurrency. Let's be moderate, let's be conservative, let's say a third of it. Even at a third, 14 trillion divided by 3 equals $4.66 trillion. Now guys, you have $4.66 trillion divided by what the market cap is today, about 536,505. That is an increase of about 18.9 times. Let's call it 19 times. That would mean that we could possibly see a Bitcoin worth $163,153, an Ethereum potentially worth $4,199, and an XRP worth $4.43 simply from wealth being transferred from this one market, the S&P. This isn't even considering all the other markets that are collapsing. And again, guys, my numbers are conservative, putting a third only of their wealth into a new emerging asset class. And guys, this could happen within a few months. Let's not forget the stock market crash of 2008 only took a few months to see the real brunt of it all. It was fall of 2008 and then rebounded in the spring of 2009. So I think traditional market crashes will be a boon for crypto investors. That's not even considering all the real world utility that we're going to see in the coming years for XRP in particular. But guys, that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you want to be eligible for the Ledger Nano X giveaway. I'm giving one away on March 15th. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.